Alright, let's talk about cryptocurrency. It's that thing your nephew, sunglasses indoors, won't shut up about at Thanksgiving. Think of it like this. It's digital money. Instead of a bank keeping track, it's a giant public digital spreadsheet called a blockchain. That spreadsheet is copied across thousands of computers worldwide. It's supposed to make it super secure, like 1,000 nosy neighbors all watching your house at once. Theoretically, no one can sneak in and change the locks without everyone noticing. It's designed to be decentralized, the Wild West of finance. You've probably heard the big names: Bitcoin, Ethereum. There are thousands more. Each transaction is a blockchain to the previous one, a permanent record. So why on earth would anyone trade their perfectly good government-issued dollars for something called Shiba Inu, Cardano? Well, the reasons are as varied and strange as the cryptocurrencies themselves. For some, it's a pure investment gamble. They look at Bitcoin's rise, from basically nothing to tens of thousands, a digital gold rush. People buy crypto not to buy a sandwich, but hoping its value will skyrocket to buy the whole sandwich shop. It's less about currency, and more like a lottery ticket requiring a new vocabulary. Then you have the true believers, the ideologues. They distrust big banks and governments. They point to 2008 and inflation-eating savings. Decentralized currency can't be printed into oblivion or frozen by a government you anger. Developers see blockchain, smart contracts, dApps, uses like voting, supply chain, digital art, and finally, FOMO, headlines of overnight millionaires push people in. If the US government decided to ban crypto, it wouldn't just be a press release saying, "Please stop." No, a multi-pronged legal assault. First move, make financial institutions forbidden from touching crypto. Banks, credit card companies, payment processors, blocked. Imagine trying to buy Bitcoin. Your bank transfer is rejected. The on-ramps and off-ramps would be blown up. Inflows dry up. Next, the government would go after the exchanges. Coinbase, Kraken, Binance, the marketplaces where people buy, sell, and trade. The feds use securities and banking laws to shut them down. License revoked, unregistered exchanges, DOJ files charges, SEC fines, Treasury freezes assets. Goal: make operating an exchange in US jurisdiction impossible. They could make holding it a crime or transacting a crime. Legislation or reinterpretation: classify crypto as contraband. IRS unleashed, surveillance increased, ISPs pressured to block access. A US ban on crypto wouldn't just hit owners, it would send shockwaves through the financial system. Let's start with the banks. Major players: JP Morgan, Goldman Sachs. A ban would slam doors, they'd liquidate holdings, causing chaos and massive losses. A frantic fire sale scramble, losses passed to investors. Businesses that embraced crypto, AMC, MicroStrategy, find strategies illegal overnight. Apps freeze accounts, delist assets, millions trapped. Panic sparks selling beyond crypto. Broader market indices plunge. Mining farms, startups, jobs vaporize. Talent and capital flee overseas. So the government drops the hammer and owning crypto is now illegal. Do millions line up to turn in Bitcoin? Of course not. Instead, we'd see the birth of a massive underground crypto economy. First step, move funds off US exchanges into self-custody wallets. Ledger, Trezor, software wallets. Trading shifts to DEX, peer-to-peer smart contracts. People use VPNs and foreign exchanges to mask location. A boom in peer-to-peer marketplaces. Think Craigslist for crypto. Payment methods, bank transfer, gift cards, sometimes briefcases of cash, incredibly risky. Scams proliferate. Gray markets create price divergence from global markets. Ordinary investors, teachers, truck drivers, tech workers, forced into shady tactics, losing protections. The moment the United States announces a full-scale crypto ban, the global market would experience a cataclysmic crash. The US is the whale in the pool. Removing it drains liquidity. Every crypto holder would rush to sell. Panic and mass sell orders. Bitcoin, Ethereum, and every altcoin would plummet 50%, 70%, maybe 90% in hours. Leveraged traders get margin calls. Automated liquidations accelerate the crash. Forced selling creates a death spiral. Billions wiped out. Public companies with crypto exposure get crushed. Stocks hammered. Contagion spreads into tech and wider markets. Global financial interconnectedness shows its teeth. Even after the bloodbath, without the US, crypto loses liquidity and legitimacy. A shadow of its former self, relegated to niche and illicit markets. The United States banning crypto would cause a major split internationally. China would say, "We told you so." They already enforce strict bans. Nimble countries like El Salvador, Switzerland, Singapore would roll out the red carpet. Ads, move your startup. Developers and investors relocate. American entrepreneurs pack up. US suffers brain drain. Major powers weigh stability versus innovation. Most try to have it both ways. Loopholes, shell companies in Cayman, trade on Singapore exchanges. Crypto flows around borders. The US isolates itself, but crypto's borderless nature makes a single country ban hard to enforce. Citizens find it harder to participate legally while the rest of the world moves on without them. Could a US ban on crypto actually work? Short answer, no, not really. Crypto is censorship resistant. No central office, no CEO, no main server to shut down. To kill it, you'd have to shut down thousands of voluntary nodes all at once, worldwide. Attempted suppression triggers the Streisand effect. More attention, more workarounds like VPNs and privacy tools. A ban would spur even more resilient, anonymous, and user-friendly tech designed to circumvent control. Look at prohibition or the war on drugs. Bans pushed activities underground and empowered criminals. It would move legal, regulated platforms into dark corners. Law enforcement loses visibility. Ultimately, a ban would likely fail, cripple industry, destroy wealth, drive talent overseas, and still not eliminate crypto. If a ban is a terrible idea destined to fail, what does the future actually look like? The crypto genie is out of the bottle, but the future isn't just Dogecoin and anarchy. Most likely, not a ban, but government co-option. A central bank digital currency, a Fed coin. A CBDC would be centralized and transparent to the government, efficiency with surveillance. It could instantly deposit stimulus, great for speed and distribution, but it could track every transaction, program money to expire, or block disapproved purchases. The coming fight is three-way: traditional banks, decentralized crypto, and government CBDCs. Most likely a messy hybrid. Digital dollars for everyday purchases, stablecoins for transfers, Bitcoin as digital gold. The key question: who will control the new digital money? Privacy, freedom, and power hang in the balance.